Now we get to the very last subject to study unit of the semester, and it is really not new work. That is only a conclusion of everything that we've done during the semester, and it really tests whether you understand what everything is all about. You are going to use in this study unit T accounts that it's coming out of your ears. And you really have to understand all the debit and all the credit entries that is going to be required from you to record a certain transaction. So let's have a look, what do we require from you. Before we get there, let's have a look what a Spanish philosopher had to say about chaos. He said, chaos is the name for any order that produces confusion in our minds. So the problem is not that there's chaos. Well, we are actually causing the chaos because there's no chaos, it's order. And what do? We make from something which is very orderly some chaotic kind of situation. And he says that is actually the thing that confuses our minds. So let's just sort out the chaos, get it into order, and then we can carry on. Now what we have to do is we have to reconstruct all T accounts. Everything that we've done, we have to reconstruct because somewhere in an account you will find a missing entry that actually has, let's say, is the debit entry that's missing, and it has a counter leg which is a credit entry which is going to complete the puzzle. So once we have a lot of information coming out of a question and we plot all the debits and credits that we have in the question, you will see that you will be able to complete the required part of the question just by following the steps. You have to be able to use T accounts to determine balancing amounts to reflect income or expense items in the statement of profit or loss, or assets, liabilities, and equity items in the statement of financial position. Now we're back here with something that we call source documents, and you can say, oh, not again. It is so boring. Source documents. I'm so sick and tired of this. But guys, I know that although you feel that way, that is where all accounting entries originates. And if you do not understand how the source document looks, what the source document does, and what the process is that we follow in order to record an accounting transaction, you will never in your life be a good accountant. So it is very, very important to understand that. We know that receipts is all about the cash book receipt journal. So that's amounts that we've received, and eventually, hopefully, we're going to bank that. It can also be a cash amount that we're going to receive, and that can be only in a cash account, which is not necessarily going to end up in the bank account. If you think about your Varsity Cafe kind of situation, then in the cash register, you're going to accumulate all your cash receipts. And then only the amounts that he wants to bank on a daily basis, weekly basis, monthly basis, how often he goes to the bank, that will end up in his bank account. The invoice, we know that we have credit invoices and cash invoices. A cash invoice, if we have issued that, will be in the cash book receipts journal. If it's a credit invoice that we have issued, it will be in the debtors journal. If it is a credit invoice that we have received, so we have purchased something on credit, that will be in the creditors journal. And if it was for cash purchase that we've made, we would have received from the supplier then a cash invoice. We know that receipts and invoices will include VAT. Check amounts paid or EFTs. I think the check is so very, very, very old-fashioned and out of date. Let's talk about the EFT. An EFT is an amount that we're going to transfer out of our bank account. And that is also going to be an amount that's going to be recorded in our cash book payments journal. Put there for Afrikaans guys as well, so they know that we are a little bit more up to date. EFTs. Good. So all payments made, that payment is not necessarily outstanding amounts. If you think about creditors, when we make the eventual payment on the creditors account, as we were able to deduct a settlement discount, the amount that we're going to pay and the amount outstanding on the creditors account are two different amounts. However, they are related to each other, and if I have the one, I can work out the other. Deposit slips. And here I want to Yeah, deposit slip is where I have cash. I go to the bank, I make up my deposit. I'm going to put that money into the bank. So I'm going to issue a deposit slip. I'm just thinking here about direct deposits into my bank account. And where am I going to pick that up? Well, the person who's going to deposit the money can send me a deposit notification, which I will know that he has deposited money. And obviously through the bank statement, I'm going to pick up if somebody has deposited money directly into my bank account. The cash register, now that is for cash sales. If you think again the Varsity Cafe kind of setup, the Spar, the Pick n Pay, whatever, cash register, there if I paid cash or by card, they put in the slip in the cash register, or they do put in the cash in the cash register. Credit card and debit card slips. Now guys, those two, cash register goes with cash, so my cash account. It's not necessarily into my bank account, but it is definitely into my cash account. Whereas credit cards and debit cards, those two, they work directly with my bank account. So how it works is, if I'm a shop owner, I'm going to sell during the day, and the client is going to pay me via credit card or debit card. Now tonight, when the banks are doing the overnight processing of their transactions, the bank will reimburse me for the amounts that was paid by credit card or by debit card. So tomorrow morning when I open my shop door, I have a look at my bank account, whoopsie, there's all my money back. So I have received immediately the amounts of money which the banks owed me via the credit cards or debit cards. So a credit card and a debit card goes hand in hand with my bank account. Then credit and debit notes. Now that is where returns of merchandise has taken place. And that would be either in my creditors allowances journal if I have returned some merchandise to my supplier, or in my debtors allowances journal where a debtor has returned some of the merchandise that I've sold to him back to me. Let's have a look what is happening in the most popular accounts that we have worked with. Now guys, what you should do in your own time is take all the possible accounts that you have come across in this semester, plot it on a T account, and then you work out for yourself what kind of debit entries can take place in that account and what kind of credit entries can take place in that account. Because if you know all the possibilities of debit entries and you know what that amounts consist of, and all the possibilities of credit entries and you know what those amounts consist of, then this would be pudding and pie, and it won't be difficult. But once you are unsure of any one of those, you are going to battle quite a lot with this subject. Right, any account has got an opening balance, and most of them, if it's a balance sheet account, will have a closing balance. The opening balance, if it's an asset account, you know it will be a debit balance. If it's a liability account, you know the opening balance would be a credit balance. Right. Then simultaneously, when I balance off an account, here's my totals here right at the bottom. And then I know when I carry the closing balance over, it will be on the credit side, because when I bring that balance down under the total line, it will be on the debit side, and that is the one that will determine whether this account has a debit balance or whether it has a credit balance. So above the line, so-called, above the total line, the closing balance is going to be carried over for an asset account on the credit side. The closing balance for a liability account, which has got a credit balance, will be carried over on the debit side, and then it will be brought down on the credit side where it should be. Good. Now, the first thing that can have an effect on a debtors account is credit sales. Now, if I have the total credit sales amount, we know what do we post to debtors? Invoices. What is an invoice? Invoice amount is the final amount, VAT inclusive, that is actually recorded on that invoice. So although we say here it sounds very simplistic, credit sales, in actual fact, the counter leg, and this would be now the invoice value of the credit sales invoice, the invoice value, the other side of this entry is actually 3 other accounts. Maybe you can write it in here once, but I won't really recommend that. I would really recommend that you break it down and put down the components. Then you know you haven't made a mistake. We know that although the total invoice value is on the debit side, of a debtors account, on the credit side is the VAT exclusive amount, excluding the settlement discount percentage, which will go to the sales account. There's an allowance for settlement discount, if they make use of allowance accounts obviously, where it is the VAT exclusive amount multiplied by the settlement discount percentage. And then the VAT needs to go to the VAT output account. So, in incomplete records, I don't have to ask you T accounts. I can ask you compile the statement of profit or loss, or I can ask you to compile the statement of financial position. So in the statement of profit and loss, I need the sales figure. But if I give you this information, you can calculate the sales figure and you can update your sales account. Or if I give you the allowance for settlement discount amount, or just the percentage or whatever, let me say I give you the amount and the percentage. If I give you the amount and the percentage, you can work back to the total VAT exclusive amount. You can complete the sales account and you can complete your VAT control account. So that is what I mean by building a puzzle. I give you little bits and pieces, but because of the interrelationship of accounts and amounts and invoices and all those things with each other, you can now complete the picture yourself and complete all the entries that needs to be passed. Right, on the credit side of the debtors account, we can receive cash from the debtor. Now, what complicates the cash, obviously, is if I receive cash, I must ask myself, was there any allowance for settlement discounts involved? If the answer is yes, then it's not just purely debit cash, credit debtors. Then I must adjust the allowance for settlement discount account and I have to adjust the VAT, which is the VAT on the discount that I have granted. So I have to read very carefully what I have to do here. If we have a look and receive money from the bank, then I have to ask the same questions because it's not only debit, bank, credit, debtors. That is part of it, but that bank, if there was settlement discounts that he could have utilized, and he did utilize, that doesn't mean that the bank account is not going to wipe out his outstanding balance. It is only going to wipe out part of his outstanding balance, but it's never going to pay me the rest of the outstanding balance, so I have to clean it out myself. So if I have the bank amount, I should know that I have to clean out the allowance for settlement discount. I have to make provision for VAT on the settlement discount, and only once I've posted those two additional entries, I have cleaned out his total outstanding balance. The bank account, that bank balance itself, is not going to do that. But if I have the amount that he has paid, I have the settlement discount percentage that he was entitled on, I can build the rest of the entries because I have enough information to do so. What happens if there is a return transaction? So I sold something on credit to the debtor, he has returned some of the goods to me. Now, that would be exactly the same as a sales transaction, just in reverse gear. So here we had a sales transaction with credited sales here with a percentage VAT exclusive net of settlement discount. We have credited the allowance for settlement discount account and we have credited VAT output. So once he has returned something, it is just the opposite. Now we're going to debit sales with a VAT exclusive amount exclusive of the settlement discount. We're going to debit the allowance for settlement discount with a percentage of settlement discount on the VAT exclusive invoice. And we're going to debit VAT input. Over here it's a rectification of the output. You can either put in input or output there. It is not going to make a difference. Good. So that takes care of returns. Credit losses. That's the next thing that can happen to a debtor's account. Now the credit losses entry on the credit side of the debtors means it has to wipe out his complete balance. So therefore we're going to credit this one here with the total VAT inclusive amount. But the counter legs has to be split because to our credit losses expense account we can only post the VAT exclusive amount and then we're going to claim the VAT on that amount that we have written off. The next possibility is if there was credit balances lying in our debtors control account, we have to transfer that to the creditors control account at the end of the year. So then we will debit our debtors control account and we will credit our creditors control account to get rid of all credit balances that's lying there. Our bank account. We know that the debit side of that bank, general ledger account, represents all the receipts, the actual receipts. If we're going to relate this back to the cash book receipts journal, these amounts that we're going to record in the bank account will be equal to the bank column in the cash book receipts journal. On the credit side, we're going to show the payments that we made out of our bank account, only our bank account, our current account. So that payments, that will represent the amounts that's recorded in the bank column of the cash book payments journal. Now, if we have received some money from our debtors, the amount that we're going to receive was in the bank column, so that didn't wipe out the debtor. So this we would debit bank and credit our debtors account like we've seen, but then we also know that we have to adjust our debtors account with the settlement discounts and the VAT thereon. So the amount received include VAT, receipt pays VAT, but it will exclude all VAT inclusive settlement discounts. Amounts that we have deposited into our bank account, where does that come from? It comes from our cash. We accumulated the cash in the cash register. If you think about the Varsity Cafe kind of example, what do? You go there, you buy cash. They put the cash in the cash register. Then the cash is piling up. At some good day, the guy who's the owner or the manager decides this cash must be banked. So what does he do? He reduces his cash amount on hand and you go and put it in the bank. So he's going to make out a deposit slip for that and he's going to bank that into his bank account. So only when that amount has been banked in the bank account, it will have an impact on the bank account itself. The cash that they have on hand will be reflected in the cash account, not in the bank account. It will only go to the bank account once it has been deposited into the bank account. Another thing that can increase my bank is cash sales. Now I accumulate everything in my cash register, and then if it has been banked immediately, then it will be reflected in the bank column, so that will be my cash sales. What is the counter leg of cash sales? I will debit my bank with the amount received, credit sales with the VAT exclusive amount, and credit VAT output with the VAT on that cash sales that has been banked. On the payment side, we are going to settle our creditors out of our bank account. Now remember, this amount that we're going to pay our creditors will be the actual amounts paid, and that does not represent the outstanding creditors balance necessarily. If there was a settlement discount that we utilized, then it meant that we have paid him less than the outstanding balance. And then you should know how to clean out the creditors account so that there's no balance left. Only a portion of that clean out process, the amount that we've paid, will come out of the bank account. The rest you have to do in the creditors account. We're going to have the allowance of settlement discount, which you're going to credit with that amount, and then the VAT that you're going to pay on the discount that you've received, that you're going to credit the VAT control account and debit the creditors account. So this is only one component to clean out an outstanding creditors balance. Cash purchases. If I've done cash purchases out of my bank account, I've transferred money out of my bank account in order to pay for those purchases. I'm going to debit purchases if it's a periodic system, VAT exclusive, or debit inventory if it is a perpetual inventory system, VAT exclusive. I'm going to debit VAT input, and obviously the bank will be credited with the amount that I've paid. All other expenses which I'm going to pay will go through my bank account, and that will all of them, where there's VAT applicable on the expense, it will include VAT. It's only on expenses which is zero rated or exempt from tax, which is being paid where there won't be any VAT included. Now, creditors and inventory, they like a married couple should be. Very close to each other, very much in love, and the one can't go without the other one. So there's a very, very close relationship between creditors and inventory. What is the relationship then? When I purchase on credit any merchandise, that means I'm going to debit inventory, and I'm going to credit, and if it's a periodic debit purchases, and I'm going to credit my creditors account. Now, what is the difference between the two? Well, if you just put it simplistically, let's say this in a world of no VAT, I would have debited inventory, credited creditors. But now a world of VAT makes life more complicated, because what am I going to take to inventory? Only the VAT exclusive amount, and then I'm going to debit VAT input, and then I'm going to credit creditors. The creditors will always be the invoice value. The VAT will go to the VAT account, and then the VAT exclusive amount will go to either purchases or inventory. Now, in a world where we make use of allowance for settlement discounts, I'm not going to take the VAT exclusive amount either to inventory or purchases, but only the VAT exclusive amount net of the settlement discount percentage. So let's say we work with a 3% settlement discount, 97% of the VAT exclusive amount will go to either inventory or purchases, depending on the type of inventory system. The 3% will go to an allowance for settlement discount. The VAT still will be the VAT input that I can claim, and then creditors will still be the invoice value. What is something else that we're going to post against the inventory account? This is only in a periodic system. Then we're going to, not a periodic, perpetual system, where we're going to update our inventory account with each and every transaction that takes place. So in our inventory account, we will have to record on the credit side all the cost price of goods sold. So the cost of sales for each and every sales transaction will go to the credit side of the inventory account. If we use a periodic system, what are we going to do? Well, all the purchases are going to the purchases account. Nothing happens when there's a sales transaction, and at the year end, we have to adjust our closing inventory to the physical inventory on hand, and that will go against the cost of sales account. Just to give you a little bit more illustration of what I mean, inventory, we say, is a no VAT item. So opening inventory won't include VAT. Cash purchases won't include VAT. Credit purchases, now that won't include VAT, but there's your direct link with your creditors account. Is it going to be the same amount? No, it's not. It is only the VAT exclusive amount after the allowance for settlement discount has been deducted. So that will only be the 97% of the VAT exclusive amount, which is going to end up there. I will be able to post the 3% to the allowance for settlement discount account without any problem. And then I know that the VAT on the invoice is going to be posted to the VAT input account. So the relationship between the inventory account and the creditors account is only for that line item there. That one which is net of VAT, net of the settlement discount percentage. On the credit side of my inventory account, I'm going to record my cost of sales, and there's my closing inventory above the line before any NRV adjustments or inventory losses has taken place. Property, plant and equipment, same story. We know that any PPE at cost price, no VAT. So I'll have my opening balance. What else can affect this account on the debit side? Only purchases of new PPE. That will be recorded here, also exclusive of VAT. When I've disposed of some of these assets, I credit the cost account with the cost price of goods sold, and then I can get my closing balance. My accumulated depreciation account, I will have an opening balance, obviously no VAT. Why? Because I'm writing off PPE which doesn't include VAT, so there's no VAT implication with depreciation. When I sell an asset, I'm going to debit my accumulated depreciation account and credit my asset disposal account. The only other entry that can affect my accumulated depreciation is my actual depreciation written off for the year, where I debit the expense account depreciation and credit my accumulated depreciation account with the amount of whatever this year's depreciation charge was. In my asset disposal account, the cost price of the asset disposed of, the accumulated depreciation of the asset disposed of, and then the proceeds, whatever bank debtors, whatever the proceeds, VAT exclusive. So the asset disposal account, no VAT included, so the VAT exclusive amount, and the purpose of this account to determine either the profit or the loss on the sale of the asset. Right, so the proceeds, once more, does not include VAT. Guys, this is nice. There's no more chaos. If your mind is right, you know exactly what you're doing, everything is organized, then you should not have a problem with this subject. and you should be able to be very successful in completing the ACC 111 course.